Hi, everybody. Good morning. Sorry, this is not morning. Good evening. Happy Sunday. Let's just give a minute or two and wait for while we wait for others to join in. All right, please let me know if you can hear me. Just let me know in the comment section if my audio is clear. So we'll be on the same. Happy Sunday, Miracle. Young Dylan, I see you. Good evening from wherever you are joining us from. Somebody said no sound. Miracle. Okay. Please let me know. Yeah. Who else? If you're not hearing me, please let me know so that I can correct my audio in case there's any glitch. This is actually the first time we're going live on YouTube, so it's a little bit different, and we're all getting used to it. I'm getting used to it, so you guys are gonna have to like manage with me today. Hopefully, everything is clear and good. So, all right. Okay. So, welcome to today's class. It's a beautiful Sunday, and this is one of the days where we do our weekly analysis, weekly outlook, where we just look at what we're expecting for the next couple of days. So, you know how we do it now. Normally, I will start with, showing you guys what I have, and then we'll take a few questions. But today, I'm going to go a little bit, um, I'm going to touch a little bit on, or a bit of a revision on the strategy that I use, and a little bit on the advanced kind of liquidity concept and how, because I've been getting some comments about some kind of stuff that we see on the chat, and it kind of looks a bit confusing. I think I did speak about it in our last live class on Tuesday, but I'm still going to talk about it today so that we can at least have a fair understanding of that. So just a minute, we're going to start right away. Let me just share this on our Instagram page for some people who wants to still join us from that end. Please, if you can share the link with your friends. No qualms about that. Just a moment, please. Okay. All right, I'm still with you guys, so please just a minute. Mm, Okay. There. All right. Now we're good to go. Okay. So I'm gonna start sharing my screen now so we can start. Let me share this on gold. All right. So I want to let me know now if you can see my screen because I'm sharing. Please let me know in the chat if you can see my screen. I'm on gold chat right now. Uh-oh. Why not now? I'm sharing the screen now. Please let me know. Can you still see it? All right, beautiful. Thank you very much. Thank you. Thank you. All right. So we're going to start first. Like I said, I want to just do a little bit of a revision on the strategy, just within a few minutes before I show you guys my setups for the week. So I've personally done my own research. I've gone through the pairs, and what I usually do is I look at the pairs that have something viable for me for the week, and then I plan with them. Right. So you know how I do my trading, right? Basically, it's still smart money concept, but we're into more of the liquidity aspect of it, right? So the whole setup and everything is just hinging around liquidity. So there are various ways that this actually shows us the setup on the chart. One of the very popular way that we see liquidity is when we see price do like this, sweep liquidity. What are we expecting? Once up, come back for it, right? And we see price move like this. So basically, this is what our area of interest, where one price come to. Then we have our order break of structure, our order block area of interest, and so on. Like this is the most fundamental part or aspect of the liquidity strategy, right? So another form that this usually comes is when we have something like this, just like this, is sweep again in our direction, right? So this is another form that we usually see um, liquidity strategy from. Okay, so these are like the basic ones that we know, and sometimes there are ways that the market will give us something else that will look a little bit different and confusing. Right. So I want to show you guys another aspect of it where we can actually use to capitalize on the market without using this very basic form or a little bit advanced from this basic form that we see, right? So how does that usually show itself? This is what we usually see. Now, this one is very common because these days, this is how the market actually flows, right? So one is something like this, where market come, sweeps liquidity, breaks structure. Let's assume we've swept liquidity. Now, here is our major structure, right? So I'm just going to be explaining it while I'm drawing it. Here, it will not break that high, right? And what will it do next? You will see the market drop like this and then finally break the structure. Now, let me label this for us, right? Now, here we have our sweep. Now, here we have a break of structure, an internal break of structure. And here we have the major break of structure, right? So this is how this kind of setup usually appears. Now, the confusing thing about this one is that when you find a setup like this, what will come to your mind based off of the first kind of setup that we usually have is that this becomes this right here. Let me draw it out like this. This confirmed higher low, and this is our higher high. So this becomes our trading range, right? That's what we might think that this setup is showing us. Whereas in the real sense, this is actually your trading range from this low, right, to this high is your trading range. So this internal structure that was created is not actually the major structure you're looking at. It is actually part of the liquidity, the engineer liquidity, even before the market broke out. Now it's creating this high inside, creating this low, but it has not come to our area of interest yet. Let's say our order block area, because this is where the sweep happened, right? Our order block area of interest is right here. And then you see this happens like this, right? So the most important thing and the major thing you're supposed to be looking out for is still the fact that you see this low here, price have not come back to mitigate this low. So what usually happens is that markets will drop down, right? Inducing price coming close to this area. It might even give you some reaction here. And then finally, markets will come down because this is also liquidity. And then the market will now move in this direction. So this is one of the advanced liquidity that you're going to find on your chart. And it may be a little bit confusing because it's a little bit different from what we see. So sorry, you guys still cannot see my chart. I don't know if it's the network glitching or what. Please let me know. Can you see my chart now? Some people say they can't see my chat. I think if you can't see, okay, some people say we can. That means it should be from your end. It should be from your end, not mine. If you're not seeing it, maybe you should just go off and come back again. It should be from your end. Go off and come back again. So yeah, this is one. Another form of this kind of liquidity. Remember, the key area of this one is the final break of structure right here. Now, another form of this liquidity is when we see the market give us something like this, right? We have a push to the upside, market drops, it doesn't get to the area of interest. We have a break of structure, it drops, then we have another break of structure before the drops actually starts, right? So let's label this now. This is our area of interest, right? This is our unmitigated area of interest. And then we have a break of structure, one. We have another break of structure, two. Multiple break of structures, right? One, two break of structures. Sometimes it could even be three. But at the end of the day, you will now find a very massive inducement back into this area of interest before what price will now move up like this. Yep. So this is another very common one that usually happens when we are trying to, analyze. All right. So these two are the basic ones that I wanted to show you guys, right? So with that, we're going to go into the chart now and then check out some. We're going to go into the chat now and check out some. So I'm going to start with the dollar index. You guys know how we do it, right? Usually we start with the dollar index. So let me switch to the dollar index now. All right, please let me know if you can see this. I'm on the dollar index right now. I'm on DXY, yeah. I don't know if the network is from my end or your end, but so this is the dollar index, and let's do some work on this guy. So from our previous live class we did on Sunday, and even on Tuesday, we did speak about the area where price is reacting to from the dollar index. This is the weekly time frame. Remember, this is a weekly market analysis, so at least the best we can do now is to start looking at the chart from the weekly time frame, because every candle here represents a week, and from in a few hours time a new week candle will start opening, right? So where is this whole thing drawing from? Let's draw up from the side view, that's from left, and look at where the chart is coming from. We're emanating from this area of interest down here. So this is where the market is coming out from, and we're having a bullish momentum, two bullish candles after a nice rejection from this area of interest. Now, if you look at this structure clearly, we have a lower low, lower high, lower low, but ultimately this structure is giving us a what? A wedge pattern, right? We're seeing something that looks like a wedge pattern. Personally, I add up everything, both chart pattern, everything, when I'm doing my analysis before I drop down to my major strategy to get my area, to get my entries, right? So we're seeing a wedge pattern forming. And what does a wedge pattern signifies on chart? Whenever you see, this is what a wedge pattern looks like, right? And this is how the outcome of a wedge pattern usually is. When you have something like this, low high, lower low, and then you start seeing the market giving you this kind of slow movement, usually what happens is that there's a breakout to the upside. That is the what implication of a wedge pattern. So if that is the implication of a wedge pattern, what does that tell you? It tells you that right here on the dollar index, we're still going to see a positively bullish market. A positively bullish market. So if we're going to see a positive bullish market, we're definitely going to break out of this wedge and continue pushing to the upside. Hopefully, we're going to see market coming even up to this point, up to the zone, and then breaking above it. If the momentum is still strong and Trump does not cause another mayhem in the market, we're probably going to see market even coming to this point. Who knows? But let's work with what we have. This is a weekly time frame. So dropping it down to the daily time frame, here we are on the daily time frame. And now even on the daily time frame, I'm seeing another chart pattern forming, which is like a pennant, pattern. Let me see if I can draw that out. No, it's not going to be clear on the daily time frame, on the 4 hour, okay, on the daily. All right, so we are reacting to this order block right here. This is the low. We have a break of structure, right? We have a break of structure here, and market is reacting to this order block. So this is where we currently are, but there's a high chance that we're about to break this high right here, but we cannot until the market opens and does what they want to do yet, right? But from the 4 hour time frame coming down to a lower time frame, we can see the momentum is already building up, right? For us to break that low, that high rather, right? So the news came last week. We had this push to the downside and all of that. Right now, the market has created, has mitigated this last low point. So what we want to see is the market giving us something like this, a bullish continuation, a bullish continuation, and then we continue to the upside. So from this whole analysis, and here, where is our destination? We have not even gotten to this mitigation point yet. This is one. So we hopefully want to see price get to this point first of all before we start thinking of, hey, are we going to go drop down or not? But we are still in the bullish momentum on the dollar index. And if we are on the bullish momentum on the dollar index, what does that mean then? On GBP USD, Euro USD, we're expecting a drop. Is that not so? Let's leave gold aside first. XXX USD, we're expecting drop from them, right? So let's start with Euro USD. Let's start with Euro USD. All right, let's start with Euro USD. Now, on Euro USD, okay, this is not Euro USD. This is Euro JPY. Let me change to Euro USD. All right, we're going to touch your pair. But let me just show you guys what I have first. Then we take a few of your own pairs and we'll just check it out together. All right, on the Euro USD, we start from the weekly time frame. Already we know that, yeah, the dollar index is still going to be bullish. So what do we expect on Euro USD? We expect bearish movements, right? So let's look at the chart and see what Euro, if it's aligning with what the dollar index is giving us. Now, from the weekly time frame, we are on a correction phase, right? A correction phase to the downside. We've created, after that rejection candle, we have two candles that are what? Bearish in momentum. However, price is already reacting to this order block on the weekly time frame. Now, all we're doing on the weekly time frame is just to look at the general bias, right? Is it coming down? Is it dropping? Yes, it is dropping. From the daily time frame, what do we have? Now, we still have our normal series. The trend still looks bullish in the daily time frame, right? Series of higher highs, higher low, higher high, higher low. We are currently on a higher low situation right now. Yeah. But just as we saw on the daily time on the dollar index, market is about to break to the downside or to break to the upside. So from this perspective, we are still bullish. But on the 4 hour time frame, if we drop here on the 4 hour, we're still going to see that there's still a lot of space for us to eat to the downside, right? We have not changed character yet. All of this that is happening on the Euro USD is all a correction from the higher time frame. So we are still trading a correction phase. We have not explicitly changed to a downtrend on the higher time frame, but on the lower time frame, we're on a mad ass downtrend, right? So it is very important most times you always understand where you are on the chart. Am I on the impulsive move? Am I on the correction of a higher time frame? If you are, then you know that, okay, for example, now this is the lowest point, right? This is the lowest support area where we'll have another order block on the daily time frame, right? And right on the daily time frame. So let me shift it back to daily. You can see that, right? On the daily time frame, if we want to have a deep retracement back into this area, but on the 4 hour, you can see clearly that yes, that area is still aligning. We still have lots of imbalance here. We have an order block that is not mitigated. So there is every chance that price will still drop way deep into this area before we start thinking of what a continuation or a change of character on the higher time frame. So on this time frame, we are still bearish. That is what it just means, right? We're still bearish. And now if you look at, if we go deeper, because now that we're bearish, what we're going to be looking for is how to join sell setups. right? So this is a 2 hour time frame. You can see how we still have a lot of imbalance here, right? And that is to tell us that we still have um nice sell setups that we can look for to sell all the way down to this point. So this is my destination currently. Until I get to this point, then I will now know, okay, would I continue in the bullish momentum of the overall trend, or we're going to break structure to the downside? I think GU has already started breaking that structure. But when we get to GU, I'll explain that one. So here now, what I'm just anticipating is how to join a sell on Euro USD, nothing more. I'm not looking for the buys, I'm looking for how to join the sell. So in that regard, we can see here that price is still giving us lower highs and lower lows, lower highs and lower lows. This is the exact point that price came back to after this range. Market broke out of this point. Now, from this place, this is all the news that happened last week, right? When we had that spike up. Now, if you guys can remember, from the analysis we did last week, I had a sell zone here. Market didn't enter the sell zone. It used the fair value gap size. So for fair value gap traders, they probably must have gotten an entry from this zone right here after the price spiked up to this point. Fair value gap right here, that's the imbalance point, right? Market tapped into it before the drop. So and also let me just point out this here before we continue. One of the difference between trading, how to trade a fair value gap and using order block as entries. Fair value gap traders, for those of us that don't know, this is how they get their entries usually. um Before the order block area, right, there is a point where price created an imbalance. Proper fair value gap entry is what I want to show you now. When price creates that imbalance there, the imbalance is still the fair value gap. Just another term for it, right? FVG. So we have the FVG here, and the mode of entry that fair value gap traders use, professional fair value gap trader here, now is they calculate, they drop a zone from the point of the imbalance, that is the whole imbalance range, right, which is from here to here, that is this zone that I drew, and then most times mark out 50% of that move. They draw up a line on 50% of that move, that is half of the move. Now that 50% is usually where they put in their entry. So the 50% entry, then the stop loss is usually just above the imbalance. That's their stop loss is usually touching on our entry. When I say our entry, people like us that use order block, right, as our entries. Now, order block zone right here. That is why you see some people have this kind of entries with tight stop loss. This is usually how they get that entry. Okay, they calculate the whole entire move of that FVG, the zone of that FVG, then magnify it by 50%. Right, when you put that 50% line, you can use your fib to calculate 50%. You can use your eyes to just calculate 50%. Right, you can see this one, the drawdown is just like 1 to 2 pip. Sniper entry, very beautiful. Now this kind of setups are really nice and cool. It's just that I don't like using FVG. I prefer the traditional way of waiting for price to touch my order block. In some cases we win, in some cases the price don't mitigate us and it goes up before even we jump in. But this is how you can capitalize on fair value gap entries for those of us that want to use that kind of entries, right? All right, then in this situation, let's say price have come back to this area, mitigated this order block. This whole thing was a spike to the upside. So this is the main mitigation. Candlestick close after price have mitigated this order block, and now we're looking for a drop. So by the time the market opens from tomorrow, London session, you will see how markets are going to create some engineered liquidity probably around this order block here for us to capitalize on a setup. So for now, there is no clean entry. I'm not even going to say I'm going to use this order block whatsoever. No, I'm just going to let the chart play out from now till Monday morning, right? Monday morning, London session, New York session, to see how market is going to engineer some areas for me to now join the sell. All I know is that right now I'm just looking for sells, but there is no clear entry on the sell just yet on Euro USD for me. Now, my next pair. All right, the chat is really quiet. Are we together? Please let me know on the chat comment, the chat section. Are we together? Are we still together? Can you guys hear me, understand what I'm saying? Please just maybe put a 111 on the box. Let me know if we're still together. All right, I'm seeing some love emojis and all right, thank you, thank you, thank you. All right, this tells me that we're together, right? So let's proceed. Um, so the next pair I'm going to be looking at is GBP USD. So GBP USD, this is practically the same thing with what the dollar, with what Euro USD is doing. So let's just run through it. This is the weekly time frame. Now, something interesting about GBP USD. GBP USD is giving us an upfront of what Euro USD is going to do. Now, look closely here on the weekly time frame. Remember this move, this bullish move, and see what we have here. One, two, three candles. Now, on the weekly time frame, these three candles have engulfed or have formed a tweezer with this bullish candle. What does that signify? My students, you will know that I always teach you guys about this sweep, right? Whenever we have price um, um, accumulate in a particular area, then market bursts out of it, then drops back into the structure. Whenever we see things like that, what do we expect? A downpour. Let me show you guys an example. This right here is an example, right? Whenever we see market push up and then the next candle slides deep into the structure already, just know that from that point is going to be a drop. Now it appears in various ways, right? It can appear as a tweezer like this, it can appear as an engulfing, or it can appear as something like this with two or three candles. You see this one right here, two candles after the market pushed up, sweeping this liquidity, one candle drop. The next thing is another drop, massive, right? Same thing here. Now, same thing we're seeing here, but this time with three candles. So this has already told me that we're going to see more drops in the market. It's period. Definitely, quote me everywhere. This thing is going to drop some more. We're going to see some nice bearish movement, which is also corresponding with what we're seeing on the dollar index, right? So, what do we do as traders now? Having this information, how does it help you? The way it helps you is this: you're just going to be looking for what sell setups, right? So how do we now get our sell setups? Already from here, we've broken structure on the daily time frame to the downside. Where is price headed? Our first destination is this point where we have this unmitigated order block waiting for price to come and drop in here. But if you can see that from here to here, it's not really far like that, right? But should price come to this zone and still breaks below it, then it just confirms that we're still going to continue going down. However, this is all too far. Let's look for how we can capitalize on the sell, right? How do we join now? Already we're seeing price giving us our lower highs and lower lows and keep dropping and dropping, and this is where we are on the chart now. It's just very similar to what we shared right now on Euro USD. Still looking for sell positions. Market has mitigated this point. An order block has dropped and been created here. So at this point, we're just going to wait for the move to drop and then price push back up, give us some nice retracement before we start dropping. So coming to lower time frames, there is no clear entry yet, right? But the entry is going to show itself. Trust me. This is already an area of interest, order block, and so on and so forth. All we just have to do is wait for the market to open, let it push some more, break structure, then start reversing. That is how we're going to get our entry. It's that simple. It's the same thing that happened last week. Yeah, we just waited for price to for the market to open, then give us that, especially during that Asia to London session, we're going to see that accumulation happen more. We're going to see that engineered liquidity being created. Then you will now spell out the area of interest properly. That is how we're going to get our entry for the sale. There's no need to rush and start saying this is where I want to sell from, because the market has not opened. We're yet to see the candles that will come out by the open of the day, right? So that's that on GBP USD. Still the same thing. We're looking for sales. All we just have to wait for is for the market to open and give us some more confirmation on how to pick out our proper zone for the sell. Then let's go to gold. Let's get to gold. Something interesting is happening on gold, and I want to share this with you guys, right? Very sweet, very, very sweet. Gold is going to be sweet this week. Has it broken trend line? Which pair are you asking if it has broken a trend line? Which trend line are you talking about? Um, all right. Before we get back to that, just let me know in the chat. I will still check it out for you. But let's get back to gold now. So for gold, yeah, um, gold has been giving us like all the predictions I had on gold that I shared with you guys from last week and last week. Everything played out pretty nice and exactly. Now going forward, this is what it's going to look like for me. Let me wipe all of this, please. Sorry, too much on the screen. Okay, so I already have my setup on the screen as you can see, and this is one of those setups that I mentioned earlier, right? Where we have, um, let me show you before I do the other part, right? Where we have something like this, market drops, then goes back up like this, right? Now, what do we have here? Okay, no, not like this. We have this. We have this drop. Then as market starts going back up, it creates this internal liquidity, then finally breaks out. So this right here is the major break of structure. This one is the internal liquidity it generates. Then we want to see price do all this thing and come back into the zone before the continuation, right? So this is our internal liquidity. This is our area of interest right here. This is what we want to see, right? So this is exactly what is happening here. So let me label it out again, right? So we have this push to the upside, then we have price coming down here. Now, when price started finally breaking the structure, went up. So what are we expecting more? We're expecting more bearish momentum back into the zone for us to have this move just like this. So this is what I'm anticipating on gold. Last week, when we talked about this whole movement, this was where we waited for price for area of interest, where I gave you guys the analysis, and you see how price came in here and mitigated. Now we've broken structure again. There's a clean break of structure here. If you look at it closely, there's a BOS here. So what do we wait for after this BOS? Is for price to drop down to our area of interest, which is here. We have more engineer liquidity here. Just wait. So your job now is to wait for price to come in here. But while price is still trying to drop in here, doesn't mean that opportunities will not come out to trade here. Oh yes, many opportunities are going to come out, right? In fact, one of the opportunities that will come out, probably this sell zone. Now, I had this sell zone before this spike happened right here. Guys have taken out this high, swept the liquidity. So there's every possibility that markets will now come back, drop down here like this, or give us a push into this zone. Now, when I see price coming into this zone, what I want to see is a candlestick close. Now, we've had a week. Order block has been mitigated. Liquidity has been swept. This is a week. That means that there's a possibility of price coming back into this zone to close with a body. So when you have a body candlestick close here and then a small time frame market structural shift, this is where we get the sell to join all the way down to that zone, right? All the way down to that H4 zone before the massive buy will commence again down to the zone here. Then we go up from here. Right. So this is what I have on gold. This is what I have on gold. Let me see which other pair again. Okay, GBP JPY. I've got something on GBP JPY. I've got something on GBP JPY. I think I've shared this setup with you guys already. My team. Oh, let me clean up all of this mess. All right, so this is my buy zone on GBP JPY. Let's head back to buy zone on GBP JPY. So this is very similar to that that setup that I showed you guys earlier on, right? The market created. This is the buy zone or the order block area of interest, the AOI that price did not mitigate, right? Now it came here, then pushed up, broke this internal, broke the external. Last week I was trying to catch a fast sell on this area, but I got knocked out, and now price is already dropping back into the structure. So I'm just going to wait for a proper down to this point. So it's like going to be like a sell to buy, more like a sell to buy before we see price proceed, because we're in a very bullish market on the GBP JPY pair. Very bullish. All right. So this is or these are the pairs that I have. So let me take a few suggestions from you guys. Which pairs do you want me to check so we can do that together? I'm seeing GBP card here already. Sorry, USD card. I'm seeing USD card. Before this class, I actually checked USD card. I didn't see much, but I'll still explain what I'm seeing here. Let's get to USD card. So the dollar index have given us halfway of what we're expecting on USD card, right? Bullish momentum. But let's look at the structure from the daily time frame. We are already trying to get bullish. Now, like I said, I already checked USD card before now, and this is what I was seeing, right? So we have this nice double bottom right here, and price is reacting towards this area of interest right here. Very sweet point. Market have touched once, come back again. So the fact that we have seen a double bottom on this area of interest, just that USD card has been choppy lately, yeah. And this is because this is USD and this is CAD. Both of them are strong currencies that are, fighting up now with the whole Trump thing, the US trade market, and all of those things. At this point, there's a lot of fundamentals that is playing behind this particular pair. That's why, like I said, yeah, I'm not so keen on trading this pair right now, because the movement is not so nice. It's slow at this point. Is you can see it's somehow choppy. There's no clear directional move right now, but we're expecting a bullish move, however, because the dollar is gaining more in the market right now. So definitely, no matter how, it's going to suffice in pushing the USD card to the upside. Now, one of the fundamentals that is actually disturbing this pair now is the fact that that US trade war, where China are pulling out and trying to shift most of their companies to Canada, as US is placing all those tariffs, high tariffs, and those bans on them. So the thing is causing a lot of contradiction in whether people are pulling out equities and pushing into Canada. Canada are pulling out. Like, there's a lot of disparities between both countries right now. That is why we're having this major, you see this chopping. Even when there was news, we could see that the news did not affect this pair that much because of the fundamentals behind it, right? So in all, we're still going to follow our structure. And from structure, you see how this market has been choppy, moving to the upside, right? And normally when we have market give us a range, if the range is in the resistant area, we expect a drop, right? If the market give us a range and the range is in the support area, we expect a push to the upside. That is how the AMD range system works, right? So in this situation, where is this range from now? This range is in a resistant area, right? Now, market has reacted to this high demand supply level right here, and market is dropping. So before the continuation, before the bullish continuation, how do we find an entry? Two ways, right? Now, the market has given a tweezer here. I would expect that this tweezer is going to form as an order block if the market should push up and break above this high. The moment you break above this high, this already is an order block for us, which is going to be a re-entry, right? It's going to be a re-entry for what? The bullish continuation. The bullish continuation. Something like this. Now, should this one engulfs this, so we have a new candle that closes below this point, the reverse will be the case, right? I'm going to expect price to drop down to even this zone, sweeping all this trend line liquidity the market has created, for us to see a continuation to the upside, because we're still bullish. We're still very much bullish on the USD card, even though the market is moving really slowly. You can see the trend line liquidity market has created a massive one, right? Which is more like a channel, but I'm not seeing this as a channel at all. All I'm just seeing is what the liquidity that has been engineered below all of this structure. So I'm more of the option of price dropping down, sweeping this point, and then giving us an entry. So let's see the 1 hour if we can have a better. Yep, we still have areas where price need to come down to those internal structural liquidities. So we're around here. So yeah, this is where we expect market to come to before the market moves along again. All right, so this is what I'll be expecting on USD card. Okay, so which other one? We're gonna check USD CHF. Okay, USD CHF. I have not really opened this pair today. I have not checked it, but let's see what it got for us. USD CHF. USD CHF. USD CHF. USD CHF has an opposite correlation with the Euro USD, right? But lately, I've been noticing that Euro CHF have not been really following its negative correlation with Euro USD. So let's check out something. Let's practicalize that now and see. Let me open both pairs and let's compare the dynamics, right? Let both be on 4 hour, these on 4 hour, and these as well on 4 hour. Okay, so both pairs are now on 4 hour time frame. So yeah, we can see here that they have a very opposite correlation, right? Opposite correlation. Now, what is the correlation here? You see how both of them are on 4 hour. Now, this one have like a downward curve like this to the upside, and this one have an upward curve to the downside, right? So yes, the correlation are still working. There were some points I thought that they were not moving the way they're supposed to move anymore. So yeah, we're still on point. So let me remove how do I exit this again? Forgotten that. Okay. All right, let's get back to USD CHF. So what I just showed you was a correlation, right? So that means that if we're expecting sales on Euro USD, we're expecting buys on USD CHF. And from this time frame, it is pretty clear where we can get our entry. I think this one is even clearer, right? Now we can get entries from 2 points. Number one, I'm seeing it very clean one is this low. Now market have come to sweep this liquidity very slightly and very soon. So we might not come back here, but this is still a valid point. Trust me. You see this? This is still a valid area. Should we have market trying to drop in before the push? Now, this drop that you're seeing, this sweep that you're seeing, is a valid sweep, yeah. But you know why I don't hold this kind of sweep accountable? Because it is done by a clean week, and it was a news movement. It was a fundamental movement. So that means that there is still a possibility that price will come in here and clean this with a candlestick. That's a body close, not a weak close. So yes, this is still a valid area. However, this is another valid point. and the valid area where we ultimately this would be the very best place for price to push in. So now we see that we had a nice impulsive to the upside, or it's just like that setup that I showed you guys earlier. Internal liquidity created before the external break of structure. Then this is our area of interest. So this is the part that you want to wait for price to come to. Maybe a push up to some more push up, finally drop again before we have the ultimate move to the upside. So this will be what I will be expecting on USD CHF. This is going to be my buy zone right here, the beautiful buy zone, right? So this could also count for the move. Very beautiful. This is what it's going to look like. My SL will just be below here, 28 pips. So I can just run this up to 30 pips. Very nice 30 pip move. If I'm taking profit here, we'll have a nice 1:3.8. That's almost 1:4. 120 pip. So this would be really, really beautiful. Yeah, something like this. Okay. Okay, so this is on GBP, sorry, USD CHF. So let's check GBP card. Someone is requesting for GBP card. GBP card. GBP cards, they're all selling like this GBP pair. Since last week, we've been having massive sales on them. Yep, more sales. This GBP card, yeah, it's a very interesting pair. Like, there's going to be interesting trades on this GBP card this week, hopefully. Why I'm saying this is because, I mean, we've had it already. This is it now. You know how I've told you guys about stuff like this here, where we have this kind of, okay, we have this movement, then price starts, creating this kind of range, and then one candle pops out, and then next candle drops back into the structure. What happens next? Sell all the way, right? So that's what's happening here on the higher time frame. Now it has already happened as a matter of fact, right? GP card has already happened. You can see the sell back into the structure. So all we're going to look for is what? Retracement to join the sell, and let's keep going down, right? So on the daily time frame, where can we get our re-entries? Two interesting places. I think I already marked it out, Seth. I want to see price come back to this higher point. Why? It's going to form something that looks like a head and shoulder pattern for the next drop. And if you go back on the weekly time frame, you see where I had this line is a very good entry. It's more like 50% of this sell candle. 50% of this sell candle. So it's a very valid area. On the 4-hour time frame, it's still looking very sharp, where we have price changing course. Although seeing market come back to this point is not going to be that easy, because the momentum on GBP card is very strong on the sell. GBP card, GBP AUD, these two are selling massively. I think GBP CHF as well, I'm not sure, but these two I'm very sure they're selling massively. So the momentum is very strong, and sometimes when we have a very strong momentum, we might not see price coming back to those areas. We might just see price hovering around 50% areas and stuffs like this. Yeah. So let's see what this zone, let me delete this. So let's see what this zone is going to look like. It's going to look like on the daily time frame if it's in a very significant position. So yes, it's in this particular significant area, which is a supply zone. After this push to the downside, we had it pull up. Then yes, so we might end up using this one first of all. But before I use this one, I want to see what engineered liquidity created around this place. Very, very, clean ones. So we have an FEG here, fair value gap point here, right? And what I'm going to be expecting is more liquidity created here. When price comes, it should do something like this. Maybe we'll see a drop more, then price comes back here and drop again of interest, now from the daily time frame. But this is going to be my first area of interest right here, where I'm going to want to take a sell from. I'm personally going to follow up on this GBP card as well, because I'm seeing very interesting movement. I just want to get on the sell as well. And capital, this is how you get high probability setup, so that will give you massive risk to reward. Massive one. Let me show you something now. What I'm talking about, massive risk to reward. Should we get our entry from this point, this is what you should be expecting. That's for those of us that can hold. If you have your stop loss just here, or let's say, let's bring it down to this point here. 49 pips, approximately 50 pips, right? This is a volatile pair. Then let's say this is your first point. Already from this point, you're already on 1 is to 3.5. Then if you want to even hold more, because like I told you guys, this is going to be aggressive sales, right? If you want to hold more, let me change it to the daily time frame so that we can get a better point. Okay, good. If you want to hold more down, yes, this is the next area of interest, right? This is the next area of interest somewhere here. So if you want to hold to this next area of interest, what are you targeting? A nice 1 is to 7. All right, a nice 1 is to 7. And then trust me, this my entry is vague. It's very vague because I'm entering from a higher time frame. Should we break this down to a smaller time frame, you can even get a smaller SL, right? From here. Excuse me. You can get a smaller SL and a higher risk to reward. You can get your SL as low as 30 pips and then get massive risk to reward. So GBP card is a very good setup. Very good trade. BTC. So BTC is going to be the last one I'm going to check. BTC. Let me see what BTC has for us. BTC. I haven't opened this asset in a while. BTC. Okay. So wow. Just a moment. Let me sync it in here. BTC is 118 now. The momentum is crazy. You know that thing that they say it's a buy, it's a buy, it's a buy. When they're trading news live, when some guys are trading you live, it's a buy, it's a buy, it's a sell. All I can tell you on BTC is it's a buy, it's a buy, it's a buy, it is a buy. Just be buying. Ah, God, this pair is crazy. It's a buy, you just they buy, they go. Okay, but let's see if we can get let's see if we can get some more detail on this buy. Yes, it's a buy, but how do we join the buy? So it's pretty straightforward here, but there's something that is a bit confusing now here, because the structure is massively buying. Now, obviously, these are points, these are areas that we expect price to come back to, right? One, and we have this. Yeah, so these are the two areas we expect price to come back to. Just like that, coming down here, forming as liquidity, but price did not get to that area of interest. And yes, this is it. We have a sweep here. This one is very practical. We have a sweep here. Excuse me. Then we have the major break of structure. Pretty straightforward. This is the internal break of structure, the external inverted liquidity. Then what do we have? Massive area of interest here. Now, the only challenge I'm having with this is this. You see, BTC is in a very bullish phase, right? And this kind of assets, when they start going, sometimes they don't look back. They just keep going. Something will stop it along the line there to start retracing and all of that. But what is that thing that is making me look like this market will continue going without coming down here first? It's creating a wedge pattern on a smaller time frame. Can you see this nice wedge pattern? Now, I've told you guys, how does a wedge pattern operate? A wedge pattern is sorry, not a wedge, a pennant. Sorry, not a wedge, a pennant. Pennants are continuation patterns like this. When price push up, right, and give you that pennant where price is contrasting into a box, like it's boxing itself, contrasting, it will shrink to the point where it cannot, contain itself, then it bursts out. And that burst is usually a continuation burst, right? So this is what a pennant looks like. And this is apparently what the market is giving us here on the daily time frame. Now on the 4 hour, you can see that, oh god, you see the pennant is so clean on the 4 hour, so clean, right? So clean. Then let's see on the 1 hour. This is what it looks like on the 1 hour. Now on the 1 hour, if you want to get an entry using this pennant, this is where your entry is going to be. I can see something here on 1 hour. I can see this area, but this area is still not clear. So we're going to look at it more on a lower time frame, right? We have this point, and what does it look like on the 4-5? Yes, 45 minutes give us unmitigated area order block. 30 minutes. 30 minutes is clearer, sharp. 30 minutes is clearer. There's an FVG right there, fair value gap right here. From this point to this point is where you have your fair value gap, right? And this is your area of interest here, like this order block area of interest, something like this. So if the market should drop back into this place for the continuation of that pennant. Now let me go back to the 4 hours and look at it again. So yeah, it still matches. It still matches. Yeah, it still matches. Then what could be the push, the catalyst that will push this price down to this point? We have this right here. We have this. Well, I'm not sure we're going to see this for now because of this sweep that is happening right now. This sweep that is happening. Should this market close, should this candle, in fact, it's going to sell down even before this candle close. We're going to still have price dropping down because of the way this previous candle closed. You see how this bullish candle, right? This bullish candle pushed up and stopped here. This one coming in, forming like an what they call it, an inside bar, right? After this inside bar, this candle is still dropping already. So obviously, we're going to see what if should this candle even close here or engulfs it a little bit, it's going to be more drop, obviously, down to what 116K before we probably see price continue pushing. But if it doesn't push up there, what we're going to see is a drop into into this area of interest like this. So this is what I'll be expecting on BTC. More drops at this point on BTC. Already we're seeing the swing, we're seeing the movement, the momentum. The way this candle closed already, the first one has given us the go ahead already that market is going to drop. But where to? This should be your, if you're already selling, for example, from here, this should be your TP point for now. This should be your TP point, and wait for the reaction to continue going up, or we continue breaking down it because I'm expecting price to break down generally. But with this pennant, we might just tap in here and continue for a buy. So that's that on BTC. All right. So this is as much as we can take for today. Today is Sunday. Basically, we just look at it's just a market outlook, right? Tuesday we're gonna go live again, but Tuesday this time is going to be in the morning. That is from 9 p.m. right? Sorry, not p.m. 9 a.m. rather. That is where we're going to go live again. That period is going to be easy for us to see some nice setups that will now trade. This one are just outlooks for us to understand what we're waiting to see from the chart for the week. Give us an idea of what we're expecting. Then on Tuesday, because why I don't do it on Monday, Monday markets are usually still scanty, still choppy. I know market is trying to arrange itself. But from Tuesday, we're going to be more settled to now look for entries on the chart. So thank you guys so much. I hope you got something. I hope you got some value. Please see, we're going to take our YouTube page now to the next level. I'm going to start dropping some nice YouTube content, like educational content, right? Teachings and all of that. So please do well to subscribe to the channel if you haven't subscribed already. I would really appreciate that. That is how you can show your support and you can show your love to me. by simply subscribing and sharing our link as well. Let us help us grow, help me grow as well, right? So I'm pleading, I'm begging you guys, please subscribe. Make sure you always turn on the notification bell so that you can be getting pop-ups like this. And I'm pretty damn straight, right, to give you guys more value, and I'll be more active as time goes on for us to, do this thing together and learn along the way. All right. Thank you very much for your time. Have a good night, guys. See you guys on Tuesday in the morning for our live session. All right. Bye.